This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
They're used to working within a transactional based company typically, and they're really well trained for the most part. And I can pitch them on quality of life, bring them to Nashville for cost of living. And we have a fun firm where I don't micromanage people. And so I can usually get a pretty good value proposition in there. But it's becoming increasingly more competitive to find good people in the space, honestly.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. Now, raising capital can be daunting for many people. If you define your strategy up front, for everything from the assets you plan on buying to the support you're going to need for the business, you're going to be in good shape. Now, as you're going to see in today's show, it's mainly about finding investors that are the right fit for you and your business and how to keep them happy and informed. Now, our next guest knows all about this, as he's been at this for way more than 10 years. He's got a lot of experience in private equity now. He served on the board of directors of a family office that invests in real estate in both private and public assets classes since 2008. Now, back in 2010, he co-founded an institutional real estate private equity firm where he was responsible for raising capital investment. He was responsible for management and investor relations. Now, today, he is the founder of Excelsior Capital, where he spearheads investor relations and capital market arms for the firm. Now, with all that, I'd like to welcome Brian Adams to the show. Brian, thanks for coming on, man.
Absolutely. Thank you for having me.
Yes. Now, guys, if you like what Brian has to say, you can reach him via his contact page at excelsiorgp.com. Okay, Brian, go ahead and tell us a little bit more about your backstory.
Yeah, absolutely. So I'm from New York originally. I met my wife in college in Connecticut, and she is a Nashville native. So we both went to graduate school up in Boston. I'm a lawyer by trade, Moved to Nashville about 15 years ago. As you referenced in the intro, my wife's family has a single family office based here in Nashville that has invested in private equity, venture capital, and commercial real estate through various funds, fundless sponsors, direct co-investments, etc. That's how I learned about the business initially, was once I joined the board, I got exposure to some of those relationships and investments we were making, became enamored with commercial real estate as a business and asset class, connected with my partner, who's also a New Yorker, who married a Nashville native, and we started the company about 15 years ago. And I'm sure we'll get into kind of what I'm focused on today, but really have been doing this for about 11 years now, full time.
Nice. So are you focusing just in that market then? Or are you guys looking at other types of places as well?
Yeah, Nashville's a great place to live. Very difficult place to invest right now. Pricing is competitive. It's become an institutional market in many ways. And given what we do, which is we're solving for yield, we're solving for cash flow, working with accredited but non-institutional investors, we just really can't afford to buy anything, unfortunately, in my backyard. So out of the roughly $500 million of real estate that we manage, only 20,000 is in Nashville, 20,000 square feet. So we're predominantly in other markets, mostly in Texas, Tennessee, Florida, and then some select Midwest markets as well.
Well, those markets you mentioned, though, are not exactly easy markets either, right? Florida, Texas, tough markets. Are they that much more difficult than Nashville?
So for us, I think it's partially a bias of things in our own backyard where we say that cap rate's ridiculous. That used to be XYZ use, and now it's becoming a burgeoning real estate area. It's very hard for us to wrap our heads around it. And meanwhile, we've been able to find some really good growth tertiary or secondary markets in Texas and in Florida in particular. The other thing we've had to do is go down in deal size. So if I was doing this interview 5-6 years ago, I would have said that we were focused on $15-20 million acquisitions. Today, I'd say it's 10 million and below. And at that price point in Nashville, you have to go pretty far out of what I would consider the Nashville MSA. New York guys come down here and they think 45 minutes, an hour away. These are places my wife and I would never go, right? So we're just a little bit more discerning, I think, when it comes to things here. But we are still able to find some attractive opportunities elsewhere.
It's interesting, that bias you mentioned before. I mean, I experienced it here in Cleveland. It's assets that I would pay $30,000 a door for 4 years ago, or even less than that, are now trading for almost double today. And I have a hard time really getting my head around some of the valuations, especially when it's that fast. It's like it's very hard to justify 2 years, or actually even in some cases less than that, where now the asset of similar quality is doubled in valuation. It's really, really tough. Maybe is it because it's not maybe as hot a market, perhaps? Like Nashville's not nearly as hot as, like, say, Dallas, for instance, right?
Yeah, I think that's part of it. And also in terms of the opportunities that we focus on the acquisition side, if you're not active in the market, I don't think brokers think of you as a real buyer, right? So we haven't bought anything in Nashville in many, many years. And so we're just not as plugged in, frankly, as we might be in Fort Myers or Fort Lauderdale or Dallas or El Paso or Chattanooga and some of these other markets that we've been transacting in, because people just aren't seeing us show up on the score sheet in terms of what we're acquiring and how we're moving forward and opportunities brought to us off market. So it's just that brokerage network that it's kind of a little bit out of touch with what we're doing these days, I think, is part of it as well.
Interesting. I would love to get into how you made that decision and what you're doing today to sort of expand beyond where you're at today. Meaning that you obviously started in Nashville and then you went off into these other markets. How did you guys set that up exactly? Like how did you guys really build and get plugged into those networks?
Yeah. I hired acquisition guys who can talk about SEC football. I'm being dead serious. So, oftentimes what we found is, it's interesting. I've been doing this for over a decade now. There's been a really big shift within the commercial real estate brokerage community towards the big, publicly traded shops, right? So Cushman and Wakefield, CBRE, JLL, they've all become institutional groups. And because of that, they've had to consolidate a lot of their sales and investment sales folks into a hub and spoke model. So where before you might have an investment salesperson in Columbus, Ohio, or Fort Myers, or some of these other secondary, tertiary markets, they're now saying, no, that person needs to be in Atlanta or Charlotte or Chicago, Minneapolis, and they're going to cover these areas. Basically, what it means is any deal that's below 20-25 million, it's really not going to be worth their efforts to spend time on. So we found was leasing brokers make typically 80% of their take-home income from leasing commissions, 20% from investment sales, right? They find an opportunity, they partner up with somebody. And so because we're not vertically integrated, we third-party market, manage and lease all of our properties, we're able to get really good deal flow on these $10 million and under opportunities because we tell leasing brokers that we get to know through picking up the phone and calling them, et cetera. Hey, if you give us an early look, if you give us a 30-day window, it seems like you're doing a good job in this property. We'll keep you on as a leasing broker, but let's avoid doing a fully marketed process here. You've got the relationship with the landlord. You've got the relationship with the seller. And that's been great way for us to kind of gain a little bit of off-market deal flow. Nice.
Oh, that's a great strategy. I mean, I've also heard of guys that will say, if you give us first look, we'll give you an extra point or something like that too. It's another way to incentivize the first look type scenario. I mean, but if everybody's doing that, then becomes a little bit trickier, right? Where what you're doing is you're giving them a long-term, I guess, keeping them in the same job for a longer period of time as opposed to a one-shot bump, So that's really cool.
Yeah, it's been effective, and I think also once you start doing $7-8 million acquisitions in some of these markets, the buyer pool is just pretty shallow, right? They're not typically going to be very buttoned up, and so we show well in the interview. We have a good reputation, we have a good brand, we don't retrade. We always show up on time with the money, and everyone gets paid accordingly. And you start doing that, these brokers get on investment sales calls regionally, or they talk to other folks in other markets. We're considered a good buyer, right? So that obviously helps a lot when that conversation's happening in the room.
Yeah, it's huge. It's huge. It's everything. Building that relationship and protecting that reputation is enormous. It's enormous. Yes.
Hey, Agostino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me.
And now when you're putting those deals together, then are you trying to bundle up a bunch of these assets and then syndicating and making a pitch that way, or are you just buying them as one-offs, the 8 to 10 million, or you said less than 10, I guess, but I'm assuming 8, but are you taking them and bundling them up, or are you just doing it as individual deals?
We're a pure play syndication firm, so just deal by deal. I mean, there are certainly opportunities where there's portfolios, but we don't put different acquisitions together for the sake of doing so. We keep it really clean and simple. That was a mistake I made early in my career, trying to get too cute with some of these transactions, and so we don't do that anymore.
Interesting, because I know guys have done it. They've taken 2 different deals from 2 different sellers, packaged up as one syndication, similar assets, same location, generally speaking, same area, so to speak. They're blocks away from each other, but you wouldn't necessarily do that.
I think timing is really challenging. Sellers are people. People are schizophrenic and unpredictable. And you never want to be a syndicator or a fundless sponsor that doesn't close on the opportunity. And so if you have one seller that retrades you or walks or goes dark, so you're not able to acquire the entire thing, right? That's a bad reputation. And I just don't want to have that mark on my scorecard.
Yeah. No, that's true. That's true. Yes. I mean, that is true, because the person that scenario I just referred to, they've done transactions with both sellers previously, so they kind of already knew that it was going to be okay, right? They had a degree of certainty there. But yeah, you're right, though. I mean, if you don't know who the sellers are, and if they could, they retrade you, they start messing around, or whatever the case may be, then yeah, you're left holding the bag as the guy putting the deal together, right?
Yeah, transactions are difficult enough as they are. And I'm not saying it's not possible, right? People do these things and they work, but from our standpoint, that's just unnecessarily complicated.
Right. So one of the things that many people often have a hard time with is making that pitch for that deal. Now, obviously, you have a great deal of experience. You've done this more than a couple times, so yeah. You've done this a while. What sort of things does someone that's starting out, or someone still fairly new to the game, what sort of things should they be doing ahead of getting that deal actually locked up?
Yeah, and so I have a full presentation on this. This is the number one question I get from people is how to raise capital effectively as a first-time entrepreneur or sponsor. You and I both know commercial real estate is a very capital-intensive business. If you don't take the sales and marketing component of it seriously, you will fail. You can't outsource it. You can't third-party it effectively. It needs to be something that you take a lot of pride and responsibility, in my opinion. So what I did when I first got into the business was I would do 5 meetings a day and 10 phone calls every day. And I wouldn't leave the office on Friday until I had the meetings and calls set up for the next week. And so that would be the ground and pound method, right? You could just kind of grind it out. You're dealing with a very high upper funnel, lower funnel conversion rate type of setup. And it's a lot of manpower and hours. What I discovered about halfway through my career, which really changed the entire business for me, was what I call the empathy pitch. So what you typically see is a first-time sponsor, somebody early in their career, they'll spend all of this time finding an opportunity, right? They'll find this deal, they'll do all this market research, they'll do the underwriting, they'll source the debt, they'll do all the things that we need to do on the initial diligence checklist. And then they'll say, well, gosh, I need to raise $1 million on this opportunity, right? They'll then take that pretty shiny object that they've created, and then they'll go to their friends and family in a very haphazard, slipshod fashion. And they'll say, well, I'm really smart and I found this great deal. You should do it. And they try to cram it down the throat of their friends and family. It's not very effective. And so what I outline to people to do is put away the ego pitch, take 100 of your contacts that you know well, that will actually take a meeting with you, that might conceivably give you their time and money, their resources. So it's what we're doing. We're trading a widget in return for their time and money. Go to them. And if you go to somebody and ask for advice, you're going to get money. If you go to somebody and ask for money, you're going to get advice. List them out from 1 to 100 in descending order of how affluent and sophisticated they are. So you start at number 1. You start at your most affluent, most sophisticated contact, personal contact in your first degree connections. And you sit down with them over a cup of coffee and you ask them advice. You don't pitch them anything. You say, if you were going to invest in commercial real estate, what would you want it to look like? Return profile, how would you want it pitched to you, what the reporting would be, distributions, multimedia potentially, what would the structure look like, what would you allocate to that opportunity, how often would you allocate, where would you want the asset to be, everything, right? And you're just taking notes. You do that starting at 1 to 100. You can probably do it in 30, 60 days if you really focus and do it over Zoom. Then you have a really good market intelligence report that tells you exactly what you should be focused on. So then you go out and find a product that's a solution set to the problem that your investors have, that your prospects have. And then when you go to them to pitch the opportunity, you start at number 100 and you work your way up to 1 because you don't want to waste your early pitches on your best prospects. Probably between 25 and 50 at-bats, you'll get pretty good. You'll get some of the feedback, the questions. But the idea is, instead of going to them and cramming a deal down the throat, you're saying, I heard everything that you said. I packaged it up exactly like you wanted it to be. Here's the solution to some of your problems that you might be having. It's just a much more efficient, easier way to do things. And we could go way down the rabbit hole on the details and that kind of the brass tacks of how we do things today. But I'm telling you right now, it takes more work on the front end. But during that time, you're also pre-selling and pre-marketing your audience and your prospects so that they're ready for you and just doesn't come out of left field when you try to show them some multifamily deal. And the hard part about it is it's also it's a reality check on what you can or can't do. You and I both know friends in this business who first-time entrepreneur, first-time sponsor will come out of the box, $100 million multifamily development deal. But their background has been as an enlisted Army officer. Like, that's great. It could be the best deal in the world, but unless you've got the right network that want what you're going to have, like, you're not going to go anywhere with that, right? The biggest fallacy going into business is that you'll raise on a good deal. I don't think anything could be farther from the truth.
Yeah, no, that's excellent advice. I mean, it's because it's what you're doing multiple things when you're having coffee with somebody, asking them for advice and feedback. Is you're also presenting your personal brand as the person that does real estate. You are a real estate person now, talking real estate and talking intelligently about real estate too, which is a big part of it. If you go in there half-cocked or you sound like a newbie, you sound like you don't know what you're doing, and then it's not going to go well. It's not going to end very well, and the chances of them even investing in your deal is slim to none. So this is all done before you even get the deal in the first place. I think many people need to realize that. Yeah.
And also on the fundraising side, let's just be real. You're dealing with a ratio business. So when I send out an email to 5,000 people on a new deal, typically 500 respond and 50 participate. So you're talking about 1%, right? So you've got to get comfortable with the fact that you're dealing with being told no all the time. And you've just got to get comfortable with it.
Yeah. Now, what sort of methodologies do you use then? Aside from that list, okay, I'm assuming these are lists of people that you might know first, second, or even third degree connections. If someone can, it's funny because most people will say, well, I don't know anybody. I don't know a single soul.
Yeah, everybody knows 100 people.
Everybody knows 100 people. Exactly. Well, part of it is that getting out of that comfort zone, right? And asking maybe your dad or your mother may not know, may not be the right avatar to invest in your deal, but maybe their boss might. And maybe their boss might be able to introduce you to somebody as a third degree connection, right? I think it's part of it is getting out of that comfort zone for many people, right? Because it's easier to say no. It's easier to say no.
Yeah, you can throw cliches at this all day long, but I think a lot of them are accurate. One of them is that it's a contact sport, right? You've got to get out there, go do networking, do the coffee meetings, make introductions, ask for introductions, be willing to cold call people, shoot them things on LinkedIn. I mean, this is just the business we're in. And so you've got to get comfortable with that. And again, you can't outsource it effectively, in my oppion. Right. No, you're absolutely right. This is, unfortunately, there's a lot of those guys out there. They hit me up all the time, they will, how should I say, vet out potential investors and all that fun stuff. But unfortunately, whenever an investor is thrown down on a deal, they're investing in me, they're investing in my partner, they're investing in what we're selling in terms of the deal itself, right? It's very hard to outsource that. Very tough to outsource that. Yeah. That's right. Now, what's your approach when it comes to the investor communication? So let's say, for instance, you in your case, you get that 1% of people that throw down that deal. Awesome. What do you do to make sure that they stay engaged with the deal and they're happy with the communication that they're getting from you and your team? Yeah. So another huge mistake I made early in my career was not appreciating that. Obviously, we're in the real estate business, but we're also in the sales, marketing, investor relations, transparency, communication business, right? These are things that underpin the investments themselves. So unless you take that seriously, your business will fail. I think it's something like 90% of all businesses in America fail within 3 years. Your real estate fundless sponsor syndication firm is no different than a small business. And I think a lot of people fall into a trap of being deal guys, going out and acquiring things and not realizing that there's a lot more to it on the front end and then during the course of your ownership. And so that was something that I spent a lot of time on probably 4 or 5 years ago thinking through. And so in terms of the reporting and the communication, we use Juniper Square as our investor relations portal, 24/7, 365 access. We have HubSpot as our CRM. We send out monthly financial statements from the property itself. And then we send out quarterly reports that kind of outline everything happening with the property, everything happening in the market. Interestingly, we started using video. So we'll do it can't be more than 5 minutes. We use a 5-minute video either of a property manager, or leasing broker, or somebody on our team to give a rundown of what's happening on the property itself. Much more people watch the video than actually click through to the link and read the newsletter. And again, you're just trying to build that relationship, that transparency. One of the reasons we do monthly distributions, even though our accounting people hate it, is like you just want to keep having those touch points, right? Send them a text notification. Hey, an ACH transfer just hit your account for this investment. Thank you so much. You can go here to find more information. These small things, I think, go a long way into building that relationship. And obviously, once you have an investor relationship, your conversion rate should go up fairly dramatically on future investments if they've had a good experience. I think not enough people appreciate that you've got to map out the investor experience and the investor journey every step of the way, from when you first meet them on LinkedIn or they first sign up for an email to all the way through to when they actually invest in you. There's a lot there that I think people just take for granted or assume happens, but you've got to be thoughtful about it because there's some sponsors that do a great job and it's a very competitive space right now.
It's interesting. So you said that you're doing monthly distributions. To your point, I can imagine your property management team is probably all irritated about that.
Yes.
What sort of assets are you doing monthly distros on? Because usually on C-class stuff, for instance, it's a little choppy, right? Because there's things that happen all the time. Sometimes things break and it goes month by month in cases, which is the reason why most people like us anyway on that side of the business, we do quarterly distributions on that. So it's interesting. So tell us a little bit about that.
Yeah, I mean, the genesis of it was investor feedback. We asked for ways that, if you go to an affluent individual and you ask a question like, how could we be doing things better? They're going to let you know. I mean, I tell people that in this business is like being the manager of a really nice country club. Not many people come to you with compliments. Most people come to you with complaints and problems and issues, and you've got to try to address them, right? So one of the biggest ones we got was we'd love to have a monthly distribution. It was challenging from our accounting team perspective. It is very lumpy, right? You're forecasting 12 months out. You're forecasting quarterly. It's not always going to be consistent, and there are moments, obviously, where we have to pause things, etc. But the feedback's been really positive so far. We did this probably starting 3-6 months ago, and at this point, we feel really comfortable with the process and systems we have in place, and so it's gone pretty smoothly. But it did take about 6 months to institute, as you can imagine, initially.
Right. That's interesting, though. So I have to imagine, though, that if you're going to do a monthly distribution, don't take this the wrong way. You're sandbagging some of the returns, so you're evening it out, right? So you're not hitting. I guess you're putting it together so you can hit the target that you promised. But I would imagine towards the end of the year, the returns are probably going on the upside, on the upswing. If I have to think about it, right?
Every asset's a little bit different. We're doing commercial real estate, which for us means everything from office to retail to industrial to medical to flex. So some assets that don't have that many tenants, you feel pretty good about, pumping out pretty equal distributions. The multi-tenants that have leasing activity, obviously are a little bit more challenging. But yeah, I mean, we try to set aside reserves on a 30-day forward-looking basis so that we always have a good idea of what kind of the free cash flow looks like, but it won't be as consistent as a quarterly.
Right. Yeah. Okay, so it sounds very similar then to the fund. So we have that net lease fund I told you about in the green room, where we have a very good idea of what the obviously what the lease terms are. We know what the lease terms are, so we know month by month what to expect. So we kind of already know that we have money built into our reserve. We know what the output should look like, and then do that accordingly. But when we're doing, I guess, C-class multifamily, like I said before, it's somewhat lumpy. So it could be a little tricky to try to anticipate that, which is why we do that quarterly. So it's sure. Interesting. No, that's good. I mean, I have to agree though. Yeah, I think many people would love to get that monthly distribution, but more importantly, to your point, it's getting another touch point and staying in front of them at the top of mind all the time. It's phenomenal. I mean, this is the reason why Coca-Cola still advertises. We all know who Coca-Cola is, but they advertise, they spend billions of dollars advertising, and not because we don't know who they are, but so we stay at the top of they're at the top of our minds, right, as consumers. So yeah, good stuff. So I know a big part of what you do is also on the systems and people side of things, right? So starting with the people side, I mean, what sort of things are you doing to bring on the right people to track all this stuff? I mean, just as you mentioned before, the customer journey is so important. And I would imagine that the people that you're partnering with, so to speak, that are working with the business there, they have to really buy into that, right?
Yeah, we've got a team of about 10 people now with this current platform. And I like hiring people that come from public accounting, investment banking, or big corporate law. They're not afraid of hard work. They're used to working within a transactional based company typically. And they're really well trained for the most part. And I can pitch them on quality of life, bring them to Nashville for cost of living. And we have a fun firm where I don't micromanage people. And so I can usually get a pretty good value proposition in there. But it's becoming increasingly more competitive to find good people in the space, honestly. I think sponsors need to, on an internal budget basis, probably bump 5 to 10% of their internal budgetary process for new hires. It's just become a very competitive space. But yeah, the people we work with are great. And, we've been very happy and fortunate to have them. We just hired somebody new asset manager that comes online, I think, in 2-3 weeks. So we continue to grow for sure.
Nice. Good. I would say that and from a technical perspective, you also mentioned the using HubSpot and Juniper Square, I believe you said, right?
Correct. Yeah.
Is that what you're using for the property management side as well? Like, are you using different teams for different areas or what?
Yeah, so we third-party property manage and lease our assets. So typically CBRE will come in and do the property management. And then the leasing, it depends on who brings us the deal, where the deal's located, who's good in market, et cetera. But it's generally a Cushman, a JLL of the world, Avis and Young, some of the big groups, although sometimes we use boutiques on the leasing side. And then, I'm a big believer in documented systems and processes that you can automate or bring in a third party to do. And so we try really hard to make things as efficient as they possibly can. And one of them is, frankly, from a fundraising perspective, to tie back to what we talked about before. I think me, like a lot of folks, even though I want to be empathetic to my investors, I still think that they want to hear from me for an hour about a deal and pontificating about how great it is and blah, 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 blah. What I realized during COVID was, most people don't really want to do a 2-hour steak dinner with me and have it be fairly tortured experience. And so when we raise capital now, instead of kind of dragging people along and saying, here's the one pager, let's set up a call, let's have coffee, we spend a lot more time on the front end putting everything together in a package that they can understand the entire deal in less than 15 minutes is the goal. And so we use drone footage, recorded pitches, Dropbox, and obviously the CRM HubSpot to make sure that everyone's getting everything they need, and so that they can understand the risk and reward of any particular opportunity. And again, other 15 minutes, the average human attention span today is about 12 minutes. And I think it's going down dramatically every day. And so what we found is, because of everything we can do on the social media side, people know who we are. Like, our pitch is really straightforward: direct deals, double-digit cash flow, tax advantages. They don't need to hear that every single time I bring them an opportunity. And they don't need to, if they want to hear me long form, they can listen to this show or they can go to the website, and that's on their time. And so I'm really trying to empower the investor and say, listen, you've already opted into what we're doing. You must like something about us and how we operate. Here's a particular investment. Let us know if you want allocation or not. And it's just much more efficient for their time and for ours. And it's really sped up our fundraising pretty significantly.
That's a very interesting way to do it, because you're right. Most syndicators, they put a deal together. And we're talking people that have syndicated, 15 years, and they send out the email, and it's the same thing over and over and over again for an hour and a half. This giant pitch, right? Yeah. And I think it's I think you're absolutely right, and it's they've already bought in, like you said. They've already bought in, so clearly they want to do business with you, right? I think the biggest part of it is that you're not really pushing unrealistic goals. You're not really. They already know what to expect with you, right? They know, because they've already done this before. So there's going to be ebbs and flows, so to speak, when it comes to the deal itself. But for the most part, it's the targets that you're putting out there. I imagine the targets are the targets, right? I mean, they're not going to be these wild swings and totally unrealistic, I would think, right?
Yeah, correct. And I think early on in my career, I was much more nervous about being that transparent on expectations and managing expectations. But now I'm much more straightforward and upfront about it, because I think it's a healthier way to have a relationship with an investor. So to your point, we're pretty consistent with what we're trying to achieve in terms of return profile and markets and strategy. Everything's a little bit different, obviously, deal by deal. And then, telling them, straightforwardly, hey, this is the opportunity. This is how much we have left. We expect it to go in a week or whatever the process is. Would you like an allocation? Yes or no? And if not this one, then we'll sure to keep you in mind the next time. And like I said, it just made things much more efficient for us and I think for our investors.
Yeah, and something that I want to highlight too, and that I'm a real big believer in, is that every market has the ABCD properties, ABCD property management, and they also have ABCD brokers. And I like how your approach is really leveraging the top brokers in that specific market to manage the asset is that's amazing. That's great stuff. It's a very unique way of people of doing it, because people don't usually do it that way. They just install their management or install their guy, so to speak, and it's their guy may not be the one for that specific market. So
I think multifamily and apartments are its own animal, and I think vertical integration makes a lot of sense for a lot of folks. For commercial and what we're doing, you can't avoid trying to pursue creating a profit center out of your management leasing, right? I mean, it's inevitable that you're going to try to create a certain amount of square footage so that you can afford to plant a flag and have your management leasing be based in Topeka, Kansas, if that's the place that you want to go. And then you're going to start trying to get third-party work. I mean, that just is the capitalist structure in play, and I think it makes a lot of sense. There's detractions there, obviously, and some cons. And also, at the end of the day, it's just really hard to fire yourself. And so you don't have a lot of optionality if the asset's not performing the way you think it can. There's certainly some downsides to what we're doing, but that's just been the way that we've managed things, and the results have been good.
Nice. Good. Okay, well, I think we're coming up to our time here. So I wanted to ask you, what piece of bulletproof advice do you have for pitching a deal?
Yeah. Again, I'll send you that presentation. Bulletproof advice would be, you're given 2 ears and 1 mouth for a reason. The more that you listen to what your investors want, and the more often you're bringing them a solution set to their problems, the better and more efficient your fundraising will be.
Love it. All right, guys. Well, if you want to reach out to Brian, you can reach him via his website at excelsiorgp.com. Hope you got some insight on how to raise capital, how to really engage with your investors, and how to make sure that your investors stay happy. And when you do that, if you apply all these things, they're going to be investors for the long term. And that's always what you want to have, is to really have those repeat customers and happy investors. Thanks for tuning in. See you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation, and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.